Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Well, it's turning out to be a terrific Thursday for the bulls for sure after that Fed rate decision. But we'll discuss that and a lot of domestic cues as well. So let's get going, Vivek.
You're quite right. It's quite a bit of a relief given the fact that the markets gained today. But first up, let's have a look at the top headlines. Markets gain after the US Federal Reserve hold on to its rate cut plan. Metals, PSB banks and Realty lead the charge. Midcaps see a very sharp recovery.
IRB Infra zooms more than 6.5% after brokerage firm Kotak Institutional Equities upgrades the stock to an add from sell and raises the target to 65 rupees from 60 rupees a share, earlier citing the company to be a key beneficiary from the Road Ministry's new projects.
Crystal Integrated Services is the new kid on the block, listing on the exchanges with 11% premium at 785 rupees a share versus its issue price of 715 rupees a share.
Rate gain backs an order from a leading US rail service, Brightline Trains, for advanced rail and airline pricing intelligence. Stock gains over 5%.
Usha Martin gains nearly 2.5% post positive commentary from Prabhudas Leeladhar. The brokerage expects demand to remain strong from domestic as well as the global market.
Okay, all right. Those are the top headlines for the markets. As we've been saying, it's a good Thursday. The Nifty is up 163 points, and it's all led by the Fed commentary as well. The markets have come off from the highs of the day, but still managing to be in the green, and it's a good green as well. So I'm sure Street would take it with both hands. Mid-cap index that has been underperforming so far has made a strong comeback. That one is up around 2%. The Nifty Bank also doing well, and that's actually outperforming the benchmark Nifty and Sensex as well. Sectoral movers, PSU banking index is doing well. We have the small cap index, which is up around 1.5%. So it's all in all a good day, and we'll have to see whether that continues or not, because we keep getting these ups and downs in the market nowadays.
You're absolutely right. Given the fact that, the last couple of trading sessions, the kind of volatility that we saw was something that was really heightened. So today it's quite good to see the markets in the green. One pack particularly that's done quite well is the entire bounce back of all of the PSU names. So have a look at, some of the top gainers in the Nifty 500 index. Most of them, it's dominated by the PSU names like Bharat Electronics, BHEL, etc. But in our segment Mid-Cap Movers, we have Hormas to take us through the mid-caps that are moving around the trade. Hormas, quite a lot of stocks today.
Well, call it a relief rally, call it Fed commentary, call it whatever. The bottom line is that the market is in the green, and that is what's more important. The broader markets are also doing very well for themselves. So we'll start off with some of the gainers in the mid-cap space. And unsurprisingly, 4 out of the top 5 gainers on the mid-cap index are PSU stocks. But we'll start off with the non-PSU names first. CG Power continues to gain. It's off the day's high, but still up 4.5%. L&T Tech, Sona, BLW has surged to the day's high, now up 7%. And Tube Investments, the Murugappa Group company, is up another 3.5%. As Vivek, you highlighted, PSU staging a rebound in today's session. PFC and REC, after a 25% correction from their peak, both of them up around 6%. SAIL and BHEL, both out of the F&O band today, both up another 4.5%. And Concor doing well for itself in today's session. A lot of stocks that are reacting to brokerage commentary today, and BSE leads those charts at 8% gain now after the upgrade that came in from Investec. Motilal Oswal after that positive commentary from MK. IRB Infra after the Kotak upgrade. Avenue Supermarts from CLSA. And NMDC after the price cut that the company undertook, but also because Citi cut its price targets this morning, citing an immediate price cut. Stocks that are doing well on the back of volumes as well, those will come up on your screen. And as we speak, Sobha is leading those charts. The real estate stocks are staging a bounce back, now 10% higher for Sobha on very strong volumes. Craftsman Automation, Ujjivan and EIL, Engineers India, doing well for themselves. And lastly, some stocks that are underperforming in today's trading session. Hard to find them, but they are Paytm, Petronet LNG, another negative brokerage commentary coming in there. Metro Brands after a 10% surge yesterday, seeing some profit booking. Radico Khaitan and Tata Investments after 8 straight lower circuits is down another 2.5% in today's session.
Thank you so much for that, Hormas. Especially, some of the Tata names, Tata Investment, like you said, 8 straight sessions of low circuits, and today some more downfall over there. But let's now slip into a short break. The management of Sharda Cropchem joins us later to discuss the business outlook and more. Welcome back. Let's now welcome Samit Chavan from Angel One for a technical check on the market. Samit, how are you reading the market at this point of time? Is this just a bounce back that could be sold into, or do you feel that there are more legs to today's bounce?
Good afternoon. In last six odd trading sessions, market has experienced a decent, price-wise correction. If you see mid-cap index, which has been on the dream run since last 6 to 8 odd months, it has seen some, decent bidding. So overall, if you see with a short-term perspective, we could see some dent, on the chart structure. So as far as Nifty is concerned, since it has slipped below its important support level of 21,800. Although yes, it has recovered a bit, we are not completely out of the woods considering the weekly time frame chart. So at higher levels, probably around 2,200, 22,300, market is likely to experience some sort of selling pressure. So we would, as of now, consider this as a pullback of this, recent correction that has happened. And at higher levels, yes, the market is likely to see some sort of, supply. So as a momentum play, one can play at current level, and probably in a day or two, one should lighten up the long positions around 2200, 300, and then probably we might see Nifty gyrating in a range of say 22,300 on the higher side and 21,700, 500 on the lower side. So that remains to be a broad range for Nifty in probably next couple of weeks time.
Okay, in a time like this, then what would your individual technical picks be, Samir?
We would go with this trend. So Siemens has been, displaying tremendous strength since last few days, and in the recent correction also, this stock did not participate. So today we are seeing good traction since morning. Stock is, on the verge of a breakout. So we expect the stock, clocking its next milestone of 5,000 quite soon. So 5,000, 5,050 should be, treated as an immediate target for this particular counter. As a trader, one can buy at current level, keeping the stop loss around 48.20. Apart from this, Concor, which has seen massive correction in last 1 odd month. It seems that the form has been based around 820, 830, and the kind of price and volume activity that we are witnessing since morning. So it suggests that the stock is likely to give a decent pullback towards 900, 920. So as a short-term view, 920 would be our target, and the stop loss can be placed around 852.
Thank you so much for your picks there, Samit. We'll have you back on the show very soon. But let's now shift our focus to LJVN. The stock has surged more than 286% in just the last 1 year. Earlier today, we discussed power demand trends and opportunities in the renewable energy space with the chairman and managing director at LJVN, Geeta Kapoor. Listen in to excerpts from this particular conversation.
Comparatively, because of the initial cost that is involved in hydro projects, the tariff is a little higher. Per unit, as on date, we can say it's approximately around 8 rupees, whereas as compared to solar, which ranges from 2.50 to 3 rupees. But this is the initial. With the passage of time, the tariff in hydro undergoes a big change. Tariff is determined in terms of 5 things. Its return on equity, its interest on loan capital. So once the loan is repaid, interest reduces. We have depreciation. We have interest on working capital and the operation and maintenance expenses. Our total commissioned projects capacity is 2,377. The major chunk goes to hydro. That is 1,972 megawatt, it's hydro. And we have 404 renewable projects, a single location largest solar project, Bikaner project, 1,000 megawatt. We propose to commission towards September end or October. So this adds 1,000 megawatt to our installed capacity, 900 on account of Arun 3, and several small projects. So a total of about 2,900 we will add in terms of megawatt, both hydro and solar, in the coming year 24-25. For the year 24-25, I can tell you that we'll be adding around 2,700 crores in our revenue. With the present projects in hand, another 1,000 to 1,500 crore we will add in the year 25-26. Even in Buxar, we are on schedule, and hopefully the first lighting of the boiler will go to September 24 this year.
Okay, all right. That's the word coming in from SGVN. That's been quite an outperformer in last 1 year. But what's outperforming in a good market today is BSE and Motilal Oswal. It is following brokerage reports. Sudarshan is joining us with all the highlights. Sudarshan, what are the brokerages making of these two stocks?
So first I'll talk about BSE. The stock is higher on a positive brokerage note. Investec has upgraded the stock to buy from hold and target is rupees 2800 per share, which implies 30% upside from current levels. Investec expects company to witness strong traction in equity derivative volumes, and the option market share for the company has jumped 3 times from 4.2% in December to more than 15% in the March quarter. And as per estimates, it is expected to see further market share gains given rapid scale-up of BankX products. Even on the margin front, Investec sees an improvement in Q4 FY24. And on the valuations front, BSE currently trades at 24 times FY26 PE, and Investec believes it has potential to achieve a 45 to 50% EPS CAGR over FY24-26. The second name in my coverage list is MK on Motilal Oswal. It initiates coverage with buy rating and target is rupees 2,000 per share, implying an upside of nearly 25% from current levels. MK believes company is a perfect vehicle to ride India's wealth, and its two major segments, assets and wealth management, are well propped to deliver superior growth. FY23-26 operating profit CAGR is seen at 25%, and 70% of company's net worth is in equity and MF treasury assets, which is seen as an added safety margin to valuations of core operating business.
Thank you so much for that, Sudarshan. Let's now slip into a short break. Like we promised earlier, the management of Sharda Cropchem joins us on the other side to discuss the business outlook and much more.
Welcome back. You're still tuned into Midcap Radar, and as promised, let's talk about Sharda Cropchem. The stock has been underperforming, and that is something that we've seen across the agrochemical space. In Q3, the company reported weak set of numbers, and they had indicated that they expect improvement in the second half of the year, but this now has been pushed a little further. To discuss the pricing and demand trends, we now have R.V. Bubna, the Chairman and Managing Director at the company, joining us now. Good afternoon, sir. Thank you so much for joining us. We have been speaking about demand and pricing for a while. What is your indication now? Do you think recovery will take longer? And where do we stand when it comes to demand and pricing or realizations in generally for your products?
Madam, the prices are still going down. I mean, remaining down. They're not going down. And I think now there is a time for it to start improving. I was there in China last week, and there was an exhibition for agrochemical products. And I found a little bit of enthusiasm on all the people who are attending and also the Chinese manufacturers. But it will not be so quick. I think it will take some time. I would say around 6 to 8 months.
Okay, sir. So in the next 6 to 8 months, you expect some amount of semblance of demand returning. Could you give us a sense of what is the kind of inventory that your customers are carrying currently? And do you feel that within the next 6 to 8 months, there can be increased demand coming in there? Also a sense of prices that you expect.
Sir, I would correct myself. When I said 6 to 8 months, that does not mean that the demand will start picking up in 6 to 8 months. I feel the demand is already started picking up. The pace of picking up is a little slow, but and as far as the stock of the customers are concerned, they are also have gone down considerably, and we are getting inquiries from the customers. We are also supplying them. But the only issue is the prices. The prices of many products have gone down to almost 20% of what was prevailing about 18 months back, and them to go up to the level of 18 months is going to take a lot of time, and this price rise is going to be a very slow phenomenon.
It is going to be a slow phenomenon, but you expect it to start in next 6 to 8 months. That's what you meant the first time, right?
Madam, the starting has already taken place.
Okay, all right. Okay,
Yes.
The start has taken place, but it will be longer than usual for it to recover to original levels.
Exactly.
Okay. We get that. So you also spoke about going to China. Now, we've been talking about China has been the center of whatever action is happening in the chemicals or the agrochemical space. First, I wanted to understand, is the internal demand in China increasing? Because if that happens, that would mean dumping would reduce to other nations. Second, you also source a lot of raw material from China. How is the trend there with respect to pricing and also in terms of supply? Is it easier?
Madam, supply has been easier all this time because of excess stock in China. And I think this global problem was triggered and started only from China because they produced huge quantity of products. After COVID, they thought there's going to be demand, and the demand couldn't catch up with their production. I was there in October last year when everybody was with a gloomy face and everybody was carrying a very huge stock of unsold production. Now I found that the demand has started picking up, but they have still not exhausted their stocks and they're still carrying a sizable amount of stocks, which will take some time to get sold in.
So you're expecting some amount of liquidation of the inventory. You said a couple of very interesting and positive points. First up, you said that demand is now back while pricing is still not there yet. Now let us talk a little bit about numbers. Earlier you had mentioned that H2 we would see a recovery in terms of both revenues as well as the bottom line, but that got pushed out. Could you give us a sense of where you would end FY24 at in terms of the top line, the margins and the bottom line? And what is the guidance that you're working with for FY25?
See, it is too fast to give an idea of what is going to be the year ending because we are only about 10 days for the year to end. All I can tell you, the signals are good and our Q4 is doing fairly well, but not in terms of quantities. But in terms of prices and the revenue, we are still at a very low level. And those revenue and prices will start picking up only after the Chinese manufacturers are able to get down to their very reasonable level of stocks and the demand starts matching up with their production.
That's something that we've been hearing from other chemical and agrochemical players as well, Mr. Bubna, that once China sees that production matching the demand, prices would see some stabilization. If you cannot give us an outlook because you had guided for 15% growth, 9 months already you're down 28%, margins are lower, so that means you might not be able to meet that guidance as well this year. But give us a sense of the export demand because there have been Red Sea crises. Have freight rates gone up? And is that something which is impacting or will impact margins going forward as well?
Madam, the demand is picking up. And the customers do not have very heavy value of stocks. The customers are very comfortable. But customers also are keeping track of what are the prices in China and they demand a very low price because they are also finding difficult to get better margins from their customers. So to give you an idea, I think in terms of quantities, we may not be very much behind the previous year ending March 23, but in terms of revenues, we are considerably behind.
Understood that, sir. So could you break this up for us geographically in terms of how exactly is the situation at the NAFTA region that you're present in and how is Europe panning out for you? FY25, any outlook you'd like to give us in terms of what's been the discussions with your customers?
See, the situation is so fluid. It's very difficult to give you an outlook of FY25, but I can tell you FY25 is going to be much better than FY24. May not be as good as FY23, but it will be somewhere better than FY24.
Okay, all right. Mr. Bubna, thank you so much for joining us today and giving us all those details. It was a pleasure speaking with you and also get a sense of what's happening in China because that's where everything starts when it comes to chemicals as well, right? So thank you so much for joining us today. Well, that's the word from Sharda Cropchem. The stock, as we said, is down 24% in last 12 months itself. For the markets, however, continues to do well. The Nifty is very close to that 22,000 mark, as we have been highlighting. It has come off from those levels and steady around those levels. Mid-cap index is an outperformer as well. But for now, we'll do one thing. We'll slip into a short break. Stay tuned. When we come back, Mutual Fund Corner will be here.